To be going over Tesla's earnings and what the hell is going on? Why is this market getting absolutely crushed? And Tesla in particular. We want to take a look at that, not necessarily even if you are a Tesla investor or not, because it's the same thing that's kind of affecting the entire hyperscaler market, which is right now the main issue is going to be, as far as I'm concerned, is the CapEx spend. That's the biggest issue. That's what people have a problem with. That's what the market has a problem with. Why are these companies spending so damn much of their money and they're basically bleeding themselves dry on free cash flow? That's the main issue. But what they're doing is they're looking to invest now for future growth. Okay. So let me share my screen. Let's go over the shareholder deck and obviously, as always, ask questions. In a nutshell, though, I think we are on the precipice of a huge investment opportunity here. Uh, to me, this is a great opportunity to buy some more Tesla. But I'm going to share my screen and you guys can make a decision for yourselves. So let's go ahead and share. Let me just pop it up here. Let's go over the shareholders deck. All right. You guys can let me know if you can see my screen. That would be great. All right. So let's take a look at the shareholders deck. All right. Q1 update. Tesla reported earnings last night after the bell, meaning after 4 o'clock, they reported earnings and they had their conference to earnings call at 5 o'clock. If anyone was able to join, what you want to take away is a few things, okay? So let's just take a look at the summary. Summary was good, okay? Q2 was a strong quarter for our core vehicle energy and services business, okay? The services business is more what we're concerned about. We don't care about what we do a little bit about the energy and the core vehicle business. It's great, it's the bread and butter for now. But we want to look at the services business. That's really where it's going to be for us because this company is evolving from a car manufacturer over to an artificial intelligence company. It always was, but it's becoming more and more real now. Okay. Infrastructure and AI initiatives. Our focus remains on strengthening these core businesses and making necessary investments that will deliver amazing abundance. Okay. Tesla generated over $100 billion in revenue on trailing 12-month basis. That's the first time they've ever done that. Okay. We achieved record-setting second quarter vehicle deliveries. That's the most they've ever gotten in a second quarter. Because remember, generally speaking, the third and fourth quarters are better. So this is the most they've ever gotten in the second quarter. A lot of that has to do with higher oil prices globally, because people don't want to pay it. And we're in another environment right now where we have higher oil prices again, and who knows how long that lasts for. People are like, I don't want to deal with this crap anymore. So they're moving forward with other plans, and that includes Tesla. Our energy storage business returned to growth, achieving its second best quarterly deployment number and record deployments on a 12-month basis, trailing 12-month basis. So far, so good. The services and other business achieve record profitability and margin in the quarter. We're going to get into that. That's the big one. Okay. Now, this one. Magdalene was so kind as to share a picture of a Cybercab live in Orlando, Florida. Cybercab production uh, began production in Gigafactory, Texas, and Tesla Semi remains on track for production this year at a new factory in Nevada. Now, I'm not going to put a lot of credence into the Semi. They've been talking about that for years. Elon's been not been very good with his timelines, but this one's a big deal. The Cybercab began production at Gigafactory, Texas. They're making about 1,000 of these a month, and they can ramp this up to 2,000. So I'll show you what they're doing right now and why it can scale so quickly, okay? Progress also continued on battery pack capacity expansion, the main limiting factor to near-term vehicle production volume. So they need to get their battery production in order to be able to sell more cars. That is the near-term constraint. Mega Factory Texas, not Gigafactory, but Mega Factory Texas, nearing completion with the start production planned for this year. Additionally, site selection, preparation, construction equipment procurement processed in the quarter for solar and semiconductor manufacturing. Okay. FSD supervised penetration continued to grow. We're going to take a look at that in greater detail in the quarter with more customers opting for subscription at the time of vehicle purchase. Remember, that's the big one. This is not a car. This is a software that is associated with a car. Okay? That's the way that I'm looking at it. Robotaxi rollout continued in the US and is now live in 7 major metro markets. We'll go over which metro markets they are and again how fast it can go to a lot more than just 7. Okay. Construction of our Fremont factory for Optimus began after we decommissioned the Model S and X lines with anticipated production later this year. So they are no longer selling the Model S and X. They aren't producing anymore. They had to decommission the factory and change it all over to Optimus. Optimus is the robot. We're not going to worry about the robot so much because that's probably some while off, but it is nice to know that, say, production will begin later this year. Now, how good it'll be, how much is it going to sell, how many can they produce? There's a lot of work to do there, okay? But you see how all this requires a lot of capital expenditure for now. And what the market doesn't like seeing is you're spending a lot of money, all your profits are being chewed up, and that's why the stock is getting hit particularly hard. But I want you to take a look beyond that. Why are they spending so much money? Well, they're spending so much money in anticipation of future revenue and future earnings, okay? Now let's take a look at this. Tesla is the largest and most exciting period of investment. From here, there remains much hard work as we aim to revolutionize transportation, energy, and productivity through our leading real world AI. Scaling will be non-linear. Okay, scaling will be non-linear. Absolutely. It will not be a straight line. It'll be exponential scale, right? And we're focused on long-term value creation. We've never been more optimistic about the future. Now, take that for whatever you want. That's obviously something they're going to say. But let's take a look. Okay, so profitability, gap income, gap net income, gap net income here, non-GAAP net income. So that's that. Don't worry about that. That's not super important. We're gonna get into the details later on. This is what I want you to take a look at. Their operating free cash flow was 4.7 billion for the quarter. That's great. But check this out. Free cash flow was negative 1.1 billion. So they actually made 4.7 billion for the quarter, but their free cash flow was negative. And that's because they're spending so much money on future investment. Terrafab, Optimus, Robotaxi. They're producing cybercabs and they're not on the road yet. So there's a cost of producing them. Okay? Terrafab is a huge investment. That's the mega factory. Ramping up their production of their mega pack factories. So this is all investment they are spending for future anticipated revenue and earnings. Now, the stock market being as fickle as it is, it's looking at 12 months saying, you guys are spending so much money. And this is the same thing that's affecting Google today. We're going to go over Google earnings tomorrow, but just in a nutshell, Google increased their capex expenditure for the year to 200 billion. Now, their free cash flow for the quarter, their operating cash flow for the quarter was about 40 billion. If you take 40 billion and you times it by 4, you're at 160 billion. But they're spending 200 billion. So the market's going, wait a second, you're going to make 160 billion this year, roughly, and you're going to spend 200? I don't like this at all. You're spending more than you're making. And for a company as profitable as Google is, that's a bad story short term. But there's a reason that Google is doing this. There's a reason that Tesla is doing this. So Tesla's not anywhere near as big as a company as Google is in terms of profitability or market cap. Operating cash flow of 4.7 billion versus Google 40 billion. Negative cash flow, free cash flow of 1.1 billion. So let's dive into the details and let's look at the positives and maybe some of the negatives. Okay. So total automotive revenue here, we're at 20.516 billion. That's up 23% year over year. That's a nice sign. I would expect this to be pretty decent on a go forward basis because of higher oil prices, as long as they can get over that constraint that they have in terms of battery packs. Okay. The battery is the main constraint here. That's the issue we're having. Daniel, while we're doing it,
Yeah.
while we're doing it, if you could address any questions, I'm just looking at one question
Oh,
here.
yeah. I read the
Lorianne says,
comment.
Zoom,
Very
sorry,
funny.
I'm late. I was attending a Tesla funeral. That is a good one. Okay, okay. But hey, Lorianne, in all fairness, it is certainly a bloodbath today. This is the biggest drop in quite some time. However, I'm going to show you. Look, when you're investing and you're able to see beyond Wall Street's short-sightedness, there is a tremendous amount of opportunity available if you're able to see beyond it. Okay. And we're going to take a look at what is beyond this. Okay. So let's take a look at automotive revenue. Automotive revenue, we don't care too much about automotive revenue. What we do care about is the gross margin on automotive revenue. Gross margin. Okay. That is important to us. Energy generation. Energy generation is kind of plugging along. We had the most deployments. The Shanghai factory is up and running. That's up 13% year over year. Nice. But nothing crazy. This is the big one. Look at this nice steady state increase here on services and other. Now, services, a good component of services is what? FSD, full self-driving subscriptions. That is up 50% year over year. Now, if that continues at this pace, and it could increase far, far faster than that as full self-driving becomes better and better and better. Okay? This is the number I really think will go up. Now, this is like leasing, but the main thing is here the monthly connectivity fee that we pay, like $15 a month, and full self drive. But we're taking a look at the active full self drive, how many people are actually doing it. Okay, total revenue, very nice number here, 28,236. Okay, total gross profit, 4751. And Danielle, if you could address the questions, I'd greatly appreciate it.
Yeah.
Fourth, 4.7 billion. Okay, so very nice. Now, the margins were not as healthy as they were in previous quarters. 16.8, the market did not like that, okay? And that's for a variety of reasons, but the market didn't like that. Now, they have had more profitability in other quarters in the past. But we're comparing it Q2 this year to Q2 last year. We are doing a lot better, but they did slightly poorer when it came to gross margins. This is a metric that the market definitely looked at and is punishing Tesla for today. Okay. Now, gross margins is because if you're investing a lot of money into your full self-driving, I thought this number would be higher though, because of how many FSD subscriptions are selling. It's just a software update. So there should be no cost. But it looks like the cost is ramping up here on the vehicle production side. Now, the more vehicles they make, the greater the cost goes down for them, okay, per vehicle. Okay, so that's a good sign. So we're trending in the right direction. We got a 28% increase, 26% increase in revenue, 23% increase in total gross profit from a year ago, although not an all-time gross profit high number, but pretty close. And I would expect this to really ramp up in the next couple quarters and into 2027. And that's where the opportunity exists, okay? That's where the opportunity is.
There's a comment by Ivan, and he
Yep.
says, most of us Elon fans, not the haters, will become multi-millionaires. Hold on to your stock for another 5 years at least. And I've only been studying the company for roughly 6 years.
Yeah, I couldn't agree more, Ivan. But I understand everyone's frustration. And this is why our strategy is so good. Look, writing puts, selling covered calls, but just keep in mind, I think you're right, Ivan, 100%. This company is going to make a lot of people a boatload of money, in my opinion. Now, there's no guarantees that'll happen, but if you look at what they're doing in terms of Cybercab, Robotaxi, Optimus, these are products that change the world in a fundamental way. Now, they haven't been realized yet. The company is still spending money to realize them. And Wall Street's saying, I don't like this. I don't like you spending all this money. You're spending all the money that you're making. We don't like this. That's the short-term nature of Wall Street. It will always be that way. But our job is to look beyond that. Okay? Now let's take a look here. Operating expenses. Operating expenses did increase a lot. We're at 4.3 billion, highest it's been in a year, and it's showing a nice trajectory upwards. And that's because they have to hire a lot of new people for Cybercab, for Robotaxi, for Optimus, and even maybe even for the Semi. Now, but again, this hasn't is has not paying dividends yet. Yet being the key word. It's paying dividends, just not yet. Okay. Now, operations from income. Okay, not a big deal. We're down 57%, but we know why. Operating margin, abysmal at 1.4. Wall Street did not like that. Again, it's because their operating expenses were substantially higher. Now, I'll tell you what Wall Street would have loved. If they didn't hire anyone, if they kept their expenses really low and this profitability number was a lot higher, I bet you the stock would have gone the opposite way. But that's not good for us investors for future outlook. We're not buying this because it's a car company. We're not buying it because it's an energy storage company. We're buying it because it is an AI company, an automated driving company, a robot production company. That's what we're buying it for. And in that process, you just have to sit there and patiently wait if you're an investor. And it's hard at times. This stock literally has done nothing in 5 years. That is a very frustrating process to go through. And I've seen it time and time again. We saw it with Microsoft for a decade. Microsoft was trading at 30 bucks forever. I'm like, this thing's never gonna move. Where are we now in Microsoft 400? This is the nature of the stock market. It's sometimes nothing, and then all of a sudden it just cranks when Wall Street finally understands what's going on. And again, when Wall Street is doing their numbers, okay? Think of when they're doing their DCF, the one that Danielle does, the one that most all Wall Street analysts do. They come up with their DCF and they say, look, the profitability is terrible for next year. And we anticipate it to be terrible going forward because they're spending all this much money on Terrafab, Robotaxi, Cybercab, Semi. They're spending all this much money, Optimus. Okay, well, the profitability is very low or maybe even negative. And then they give you a PE ratio to that. What they don't necessarily take into account is what is that going to yield in the years ahead? And that's where the opportunity is. That's what we're looking at. What is the yield ahead for all this capital expenditure? And we're going to go over this in detail with Google tomorrow. Google is the same thing. I'm surprised about Google because, again, we'll get into this tomorrow. Their cloud business grew by 82%. But Wall Street does not like that 200 billion, excuse me, capex spend. No, Wall Street did not like that whatsoever. Okay. Now let's take a look at adjusted EBITDA. Pretty good. That's earning before taxes and depreciation allowance, income tax and depreciation allowance. Okay, that's down 4%. EBITDA margin also down. Again, this is because of the operating expenses were pretty high. And sorry, operating expenses right here, they're pretty high. And that's the way it is. Daniel, if you want to chime in anywhere, let me know, okay?
Yeah.
Now, uh, EPS. Wall Street was expecting 49 cents. We came in at 32 cents. Okay? Not good in terms of Wall Street's expectations, which is fine. Okay? But we want to take a look at what is going on. Okay? So, net cash provided by operating activities. You can see here quarter to quarter. Okay? It's pretty good. Uh, there we go. Quarter to quarter. Okay. Now here we hit 4.7 billion for the quarter, up 85% from a year ago. That's very good. Okay. CapEx. This is the part that Wall Street did not like whatsoever. Why are you spending so much damn money? How do I know you're going to get a return for it? How do I know Optimus is going to work? How do I know that Robotaxi is going to be real? There's only a few on the road right now. Why are you spending so much money on it? This is what Wall Street does not like. But this, again, I tell you guys, this is where that opportunity exists. And sometimes those opportunities are so massive because of Wall Street's short-sightedness that it makes people like Ivan was saying, multimillionaires in a very short time span. But you have to understand the company. You have to understand the details as to how it works. Okay. Free cash flow. Now, free cash flow last few quarters were pretty good. Okay. This quarter, they actually burned through 1.1 billion. So let's take a look at their cash stockpile, cash equivalents, and short-term investments. So currently, they have $43 billion sitting in cash equivalents, and short-term investments. Just sitting there, 43 billion. Now the market cap is about 1.2 trillion, which is 1,200 billion. Okay. So they've got a good amount of cash. So about 4% of the value of the company is just cash. Just cash. If everything else is worth nothing, that tells you for them to implement all the projects they want, they don't have to borrow money right now. All they have to do is use this cash stockpile. But Wall Street will not like it if they start burning through this. So this quarter, they'll only burn through 1.1 billion. Not a big deal considering you have 44. If 44 went down to 40, 44 went down to 43 and a half. 44.7 went down to 43 and a half. So you burned through 1.1 billion. Wall Street did not like that. And I
Yeah.
can't stress this enough. This is the problem with Wall Street. It's so short-sighted. It always looks at, okay, well, what's going to happen next 12 months? Let me come up with my DCF and my 1 year price target. Well, if someone's burning through $1.1 billion in cash a quarter, the 1 year price target is not going to be great. Why are your operating expenses so much higher? Not great. We don't like that. But Tesla, I would expect they have to build their terafab still. They have to scale the semi factory. They have to build Optimus, which they need actuators for, chips. They need a lot of things. I would expect the next number of quarters for this number to go down even further. Because again, if you're building a cyber cab, it costs a lot of money to build a cyber cab. $30,000 probably around, maybe even less. But let's call it 30,000. Now you build 1,000 of those, 2,000 a month, and they're not on the road earning money yet. You got a problem. Now each cybercab is probably going to produce anywhere at minimum $5,000 profit, maybe even up to 20,000. We don't know the exact range yet. When they sell a car, okay, look at the gross margin on automotive revenue. Okay, we'll just take this number for the sake of argument. Okay, that means if they're selling a Model Y, they're making six, seven, $8,000, maybe a bit more, as a gross margin. Okay, these cyber cabs will make multiple times of that, each one per year. But right now, you're in the process of making them without them hitting the street. That's a problem. Wall Street doesn't like that. Does everyone understand where I'm getting at here? I really would like to see if this is making sense to you guys because it is difficult to kind of comprehend why Wall Street found this to be so negative. Okay, so Model 3 and Model Y production, here it is. Excellent quarter, 442,000, and inventory actually went down. The Cybertruck has been a flop. There's no getting around that one. It's a flop. 8,800 units, and there's probably some residual Model S's and X's in there, but 8,800 units for the entire quarter. What does that work into? 3,000 a month globally or in North America. The problem is it's just too expensive. It looks weird. It's too expensive. I don't even know why they did this. Maybe to check out new technology, but this and just to tell you how stocks work and how they get punished or how they're helped. What Wall Street wants to see is do you spend money prudently? The cyber truck build was not prudent. 8,800 units for all that money spent, not good. And they're saying to yourselves, how do I know Robotaxi is going to work? How do I know Cybercab is going to work? How do we know this? Well, that's the question. Why are you building this terafab? How many chips do you actually need? Now, terafab is the factory that they're building in Texas next to the existing car factory, okay, in Austin, and that will produce the chips that they anticipate they will need for Optimus because Taiwan Semiconductor and Intel and Samsung cannot produce enough chips. And it also has a memory division in there, okay? So Micron cannot supply enough. So they're going to have to make their own because that's how much anticipated demand they think they have. Okay? So we're at 451,000 in deliveries. That is not quite a record, but nice increase year over year and the most it's been in the last number of quarters. Very nice. Good to see that. Okay? Now, Now let's scroll down here to again other models, and this is pretty much it's just all Cybertrucks at this point, but it's not. Now this is production, okay, and this is deliveries. So they delivered 480,000 vehicles for the quarter. Not quite as high as Q3 of last year, but we're not comparing it to Q3 of last year because Q2 of last year because Q3 is and Q4 are generally better quarters, okay? So 384,000 compared to 480,000 this quarter. That's a nice bump up, 25,000. Okay, but why is
Yeah,
that
one thing I wanted to say is like
yeah,
although like deliveries increased by 25%, the reason gross margin went down was because of average sale price. Like average sale price went down, and like there
yep.
are reasons for that.
Yeah, average sale price did go down. Absolutely.
Yeah, it went down and like the sales went up, but it did not help the gross margin overall. Although like what was previously imagined was like they're gonna reduce their average sale price and the deliveries would go up by more than I would say 25%. It's going up, but I think it needs the problem right now, the Wall Street at which Wall Street is looking at is their free cash flow is negative. And that's because
That's 100% it.
Yeah, people want to see a tangible or visible result to your investments. So if your free cash flow is negative, like intuitively, your stock price would go down because you're basically discounting those free cash flows back to the present moment. That's
Yeah,
what
and that
happened.
100%. Yeah, absolutely, Daniel. Free cash flow is negative. Wall Street didn't like that. They're saying you're spending too much money. Well, you are profitable, 4.7 billion. That's a nice profit. But why are you spending so much money? Now we talked about why they're spending so much money. So the question is, do you believe in the story? If you believe in the story, great. If you don't believe in the story, the stock is not for you, right?
Yeah,
For
that's
me,
what I've been saying all along, like for the past 2 months, that most of these hyperscalers are becoming value stocks at the moment. Like they are like if you see value in them, keep invested, you stay
what
invested, and they would show a
Danielle,
return in some time.
yeah, Danielle, and define value. Value means when a stock becomes very cheap. Essentially, that's what it boils down to.
Yeah, it basically means it has a value that's unlocked at the moment. Okay, that'll be unlocked after some time. That's locked at the moment. That'll be unlocked in some time. Right now, you're not seeing what they're doing, but once you'll see the visible results, that is when you'll see value. So now it's becoming a value stock because right now, like what Omar said, Wall Street is looking at negative free cash flow, and that's why the stock is getting discounted, but it's becoming a value stock because the value is locked. And once this value is unlocked, you'll see the price go up. You will see all of these like metrics like revenue and free cash flow become positive again. And that's when the value is unlocked. That's what a value stock is basically. There's a locked value that not everyone can see.
Yeah, absolutely. Now let's take a look at something very important here, okay? We're almost at 10 million deliveries all time. So 10 million Tesla cars on the road globally, okay? And they're collecting data all the time. This is training the full self-drive software, okay? Training it. Now, this is a very encouraging here. Look at active full self-driving subscriptions. Now, this is a one-time payment of roughly 10,000, could be 13,000, kind of fluctuates in price. Let's call it 10,000, okay? We went from 950,000 people to now 1.48 million people. 55% of the new vehicles that they sold, 55% had full self-driving attached to it. That is why they are spending the money. Why are people buying this? Well, they want to be driven around. That's great. But B, they may be looking to get money. They may be looking to make money by operating a fleet because the value of this subscription will only increase over time, and this will lead to additional profitability. Now, you can pay for this one time, or you can pay $100 a month. Now, if you're paying $100 a month and you got 1.5 million people using it, and you're selling more and more cars, so let's say they sell another, let's just say theoretically, they sell 500,000 cars this quarter. And now another 200, let's call it 75,000, that's 55%, are now also buying full self-drive at $100 a month or a one-time fee of 10,000. That's pure profit. Total profit. It's just software. They're doing it anyways. But Wall Street doesn't like the fact that they're burning through cash. We're looking at saying, hey, this number is very encouraging. A 56% increase year over year. Very encouraging to see this. I would expect this number to really start ramping up. Now, I want to quickly pivot to what exactly is going on with this Robotaxi business. Okay, let's take a look. This is a Reuters um, article. Is this the one I'm looking for? Uh, where's this one? Danielle, just give me 1 second.
Yeah.
Oh, here it is. No, that's not the one. It's Reuters. My apologies. Okay, so let's take a look at this, okay? It says your Tesla's once bullish tone on Robotaxi changes, okay? But what we want to take a look at is something more. Right? Something happened here. Let me just
Yeah.
go back. Okay. What the main thing we want to take a look here, a year ago, Tesla, Elon Musk company, said the company's Robotaxi would expand at a hyper exponential rate and be available to half the population by the end of 2025. Didn't happen. Not even close. Now, what are they doing? They're going deliberately very, very slow. And this is one thing I do not like about Elon. He gives these ambitious targets. I'm not sure if he's doing it because he wants internally to be able to hit these targets, but he doesn't hit targets. And you have to know that going into it. Whatever he says, add more time to it. There's almost no doubt about that, okay? Since launching a small robotaxi pilot in June of 25, so roughly a year ago, Tesla has only expanded to a handful of cities, okay? In Texas and Florida. Now they are in 7 different cities now. Okay, Austin, Houston, Dallas, Orlando, Tampa, and Phoenix, and the Bay Area, San Francisco Bay Area. That's 7 cities. Okay, And what they're doing is they're really testing this thing out. They're going very slow, deliberately to make sure there are no issues. Because if there are issues, it's going to cause a massive problem with scaling this thing and rolling it out to 100 cities, to 1,000 cities globally. Okay? Now, full self-driving isn't even available in certain countries, like the Netherlands. They just approved it. So that 1.48 number we saw, I think that number is going to increase rapidly over the next number of quarters. Okay? So, but right now we're only in 7 cities. Now, this is the key. Tesla said paying customers have traveled 2.5 million miles in its Robotaxi service, including 380,000 miles in rides without an in-vehicle safety monitor. Okay? Now, the 380,000 miles, it's roughly 600,000 kilometers, has been without incident. Without incident. No crashes, no nothing. Think of if you were to drive 600,000 or I were to drive 600,000, any of us would drive 600,000 kilometers. Could we do it without getting into a fender bender? That's a lot of driving. But Tesla's doing it. They're going this 380,000 kilometers. They're making it, they're growing. This is really nice to see. 380,000 miles without incident. So what they're doing is they're carefully checking this. Does this work? Does that work? Every possible condition. Rain, hail, maybe some sort of storm, bright lights, low light. This recent thing we had here in Toronto with that orange sky that we had last week. They're testing it in every single condition possible. No safety driver, and they want to make sure it works because once they know it works, what are they going to do? Like that. All of a sudden, there's 1,000, 10,000, 20,000, 100,000 cars on the road, all making between, let's say, $5,000 and $15,000 a year. That changes the entire dynamic of the company. And all of a sudden, Wall Street goes, wow, wait a second, this can be global. It'll change everything. And the stock, this is how stocks go from whatever it's at today, 320 to 2,000 in a very short time span, or whatever, 1,500, or whatever it may be. I don't know what that number will be. Why? Because profitability would increase rapidly. But again, Wall Street's looking at that short-term stuff. You're spending more money than you're making. You're burning your cash stockpile. This isn't real yet. You only have a few cars on the road. What's going on? Now, there's a reason they're making so many cybercabs. They're making them. They're producing them since April of this year. And I believe it's around 1,000 a month they're making right now. And I think it ramps up to 2,000 next month. So they're going to have a good inventory of these cybercabs on the road, ready to deploy right away as soon as they feel comfortable. Tesla's unsupervised robotaxi miles remains well below the more than 220 million autonomous miles driven by Waymo, underscoring the lead of Alphabet's self-driving unit holds in commercial deployment. Yeah, and again, I've said this before. This is a totally different technology. Okay, this is not visual and AI based. This is right radar and lidar, far more expensive. Once Tesla gets this right, I don't see how Waymo lives. I just don't see how they live. They can't compete. It's far too expensive. If you're producing a car at 3 times the cost, and it can only go in certain areas, it has to be geofenced, and it has to learn the streets. Well, how's it going to compete? The only way it's going to be able to compete is if Tesla's crashing and making errors. And that's why they're going so slow. Tesla definitely has technology lead, and they definitely have the lead when it comes to scalability. If Waymo's been around for a decade plus. Why haven't they got 100,000 cars on the road? Because they can't. Okay? Barclays analyst wrote earlier this month that Tesla's perceived advantage of robotaxis is its ability to scale more rapidly, but instead it has been seen by many investors as somewhat slow. Absolutely, it's been slow, but the point is they're doing it slowly on purpose to make sure there are no problems. Can you imagine the headlines? Tesla car gets into Robotaxi gets into an accident. All the issues that's going to cause because the media hates Tesla. Why? Because Tesla doesn't advertise. The media will be all over this. It's going to be terrible for publicity. It's going to be terrible for the stock price. They're going slow on purpose and they're going to continue to go slow until they think, hey, we got this. This is working. at scale. And there's a small amount of vehicles in every city. But now you have that level of comfort. You've got the data. You're comfortable. You're like, hey, let's double the cars. Let's quadruple the cars. Because if this thing were to work properly and they had the cyber cabs available, this would be in every major city, country in the world. That's the opportunity here. Okay? And that's the point. You have to look beyond this cash flow bleed and capex spend and say, do I believe in this opportunity or do I think this is a complete scam? What do you think? Okay? And I'm not even getting into this Optimus robots. This is down the road. Okay? Now, Elon Musk has said investors have valued Tesla on the promise that robotaxis, to a certain extent, not certainly not, they're certainly not giving it. Now, the market is giving it credit somewhat for robotaxis, but not to the scale that they can produce profit. Not even close. There would be millions of these things on the road globally, making enormous sums of money that no company has ever seen before in the history of a company. That's the opportunity. Optimus would be much, much bigger opportunity than that even, okay? So the stock trades at a forward times earnings of 166, far above multiples of traditional automakers and big tech companies. That is 100% true. And the reason it does that is because that potential exists. But this number can decrease very rapidly as soon as they scale this out, okay? Heavy AI spending, weaker profits weigh on Tesla shares. This is it. Okay, so that's pretty much what it boils down to right now. And I'm going to roll back over to little bit more detail. And again, guys, ask questions if you have along the way. Are are we able? Are you guys seeing the bigger picture? I really want to know that. And do you believe in the bigger picture, or do you like, hey, no, this is all BS? Which one is it? Now, to me, I'm seeing the bigger picture here. I'm buying this. We're buying this in the fund. I'm seeing this, and the reason we're buying it is because we see the potential. Now, if you've gone 380,000 miles without problem, that's a very good sign. Very, very good sign. There's a reason this number is increasing so rapidly. Number of people buying full self-driving when they're buying the car. Because it works. At $100 a month, you got a chauffeur. That's a damn good deal. So a lot of these things are coming into play. They're just not there yet. Now, where the stock goes from here, I don't know. Next quarter could be more capex spend. And it's still, Robotaxi still hasn't scaled yet. They're probably a lot more on the road by then, but not enough to move the needle. But I'm telling you, it's coming pretty damn soon. It could be July, it could be August, it could be September. There's going to be a lot more Robotaxi on the road soon. Because if you've gone 380,000 miles, no problems, well, hey, why not 3.8 million miles? Why not? Now,
Mhm.
another good. Danielle, just read the questions.
No, these are comments. So Mac Delaney says, I'm totally seeing the bigger picture with Tesla. And Lorianne says, I'm holding and holding and still holding.
Yeah, yeah, and sometimes it's frustrating. Magdalena, thank you so much, Magdalena, for sharing that Robotaxi Cybercab, excuse me, pick. That was cool to see. I've never seen one in person. Let us know if you start seeing more of them, because that's the question. How fast are they going to scale this thing? That's the bigger picture. And
I I
imagine,
I just wanted to say like it's a question of whether you can hang tight or not because like it's like
yeah,
if like there's an experiment going on you don't see like what's going to come out of that experiment but you have to hang tight if you have faith. Some like all of these hyperscalers have delivered before, and it's gonna be more than likely the same kind of outcome, but it'll take time. You know, that's like I've repeatedly said, like it's these have become value stocks, and you should treat these as value stocks. Like treat these as long-term investments and not a short-term thing. And like ultimately, like as Omar said, like once there was a time when Microsoft used to trade at around $30 and it stayed at that price for a long period of time, but after some time, like now, right now, it's trading at 400. So it unlocked the value. And it's going to be the same scenario. For now, they're doing all of their capex. And until they are done with their capex, they are going to stay as value stocks, but the value would eventually be unlocked.
Yeah, couldn't agree more, Danielle. Magdalena says only one lonely Robotaxi that she's seen so far, but a boatload of Cybertrucks in Florida. Yeah. Yeah, a lot of Cybertrucks in Florida. They're not selling a lot of Cybertrucks, so that's not something we're not going to worry about. I
And
think it's kind of,
I want to say one more thing. The more you see these robo taxis on the road, the more val unlock of value you'll see with the stock price as well. The more you see this, it's going to be very proportional, in my opinion.
yeah, absolutely. It's going to be very proportional once you start seeing more and more because Wall Street's going to say, wait a second. How many are there on the road? Daniel, could you just, while I'm doing this, can you just maybe see if you can find out some information as to how many there actually are on the road across all different cities? I know there's an interactive ch a chart somewhere, but I was having trouble locating it. I think it's not a lot. It's sub 200. Sub 200 cars total. Not a lot.
Well,
Okay.
yeah,
But they have 380,000 miles. That's a lot. Okay. Another really good thing to see here is their demand for their vehicles has been the best it's been in a long time. They only have 15 days of the supply right now. That's a good sign. And last year at this time, we had 24 days of supply of vehicles. Even last quarter, 27 days of supply. That means they had a lot more deliveries than they actually produced. Now they'll have to ramp up production this year, this quarter, or they probably won't be able to meet their deliveries. Again, because demand is high for electric vehicles considering the geopolitical environment we're in with higher gasoline and petrol prices if you were a European. Okay, storage deployed. This is great too. You're going to need a lot more storage as these data centers roll out. Okay, so they're ramping up production. The Shanghai factory is well underway. The Texas factory I know can produce 40 gigawatt hours per year. The Shanghai factory 20. The Shanghai factory will also go to 40. So then you're gonna have a 80 gigawatt hour capacity, which would mean 20 per quarter. And you can see here right now we did 13.5. That's a really nice number. But they have more room on the upside as they scale this business up. And this is a great business. This business is going to grow quite a bit here. Okay, and it'll probably grow to be as big, if not bigger, than their car business.
as per this Robotaxi tracker, okay, it says 25 cumulative vehicles in across Austin, Dallas, and Houston.
Yeah, but it doesn't probably include Orlando, Texas.
No, yeah, so this is like
Orlando.
end of April.
Oh, end of April is different. Sorry, yeah, it's a lot more now. I think it's sub, but it's still not a lot. It's only
So
maybe a couple.
Magdalene saw a rare sight.
Yeah, but it's more than that now. It's probably a couple
Yeah.
hundred.
Yeah.
But it's not a huge amount. Okay, not a huge amount. But again, the thing that you want to take away is not the huge amount. That's what Wall Street's fixated on. You want to take the fact that the count is it's infinitely scalable.
Yeah.
That's it. All you got to do is software switch done. You're scaled. That's the difference.
Yeah, and it's going to be something that's tangible and visible, and Wall Street will take a notice of that once it's like becoming more and more prevalent.
Yeah. Did you find a more recent number, Daniel? It's
I
not been.
found
It's
a
not.
recent number end of like so this is like end of I saw this one. Okay, so end of May, May 31st, 2026. So May, not July.
That's
So I'm
before they
looking,
went to Florida, though.
yeah, that's before. So it's 42. I'm looking at like other pages.
Yeah, I tried to find the tracker too. There's, but the point is, there's not a lot of them. There's only a couple hundred roaming around. That's it. They are paid rides, but they're costing more right now than they actually produce. That won't be the case for long. That's the key. That will not be the case for very long. It's very easy when you're making 1,000 cybercabs per month to go from 200 to 5,000, 10,000, 20,000, 40,000. All of a sudden, now when there's 40,000 roads on a vehicle, well, hey, that automotive business isn't so important anymore, is it? And that's how fast it can change. But again, this is the whole part of investing. You have to believe in it or not believe in it. If you believe in it,
There's
great.
a
If you don't believe in it, that's also fine.
there's an app called Robotaxi Tracker, and it tracks all of the robotaxis, whether it's like Tesla or Waymo, that are
Yeah.
like in operation across the like across all the US cities.
Yeah, well, just see if you can pinpoint just Tesla. We don't. I don't really care about Waymo. Waymo doesn't have a lot of cars on the road either, and that's because it's not scalable. Simple as that.
Can I share my
Automotive,
screen?
sure, absolutely. Go ahead.
One sec. I think you'll infer this information better than me. So like these like so this is the tracker. And this is Tesla, and we're not looking at Waymo or Zeus. So rider vehicles is 34, unsupervised 16,
Yeah,
inactive.
this is the one I was looking for. This is the one.
Okay, so but like it's across four cities. It's not Orlando. Orlando's not here.
Yeah, it's not there yet.
Yeah, so like Orlando, it's like 34 across Austin.
But
Many
go
more
back
across Bay Area.
go back to Austin. Okay, what you want to look at here is unsupervised versus inactive or cyber cabs. Okay, so inactive, they haven't been seen. Unsupervised is what matters. Now look
Yeah,
at that 175 number. Vehicles registered with Texas Department of Motor Vehicles for this operator statewide in all Texas service areas. Service area per vehicle is unknown unless tracked by the community. Go to Bay Area.
Bay Area
I
is
know
much higher.
Houston. Yeah, so Bay Area, but there's only 11 on the road right now. So there's 700,
What's the
640.
643 number then?
The
It said
643 numbers is a rider vehicles they
registered?
have. Yeah, registered.
Registered.
They have, yeah, so they have
Okay.
registered, ready to go. Dallas. So again, you see how they're going very slow, guys? Very slow. It even shows the average miles, the average fare, how many miles they've gotten. Go to Houston and then pivot back to
Okay.
Austin. No,
Awesome.
Austin. So 9,965. Now this is specific. I'm not sure if this is specifically Cybercab. Scroll down here. Yeah, this is the one. So this is the number I saw. See that number there? The Texas DMV registered. See how slow this is going, guys? It's going very slow. You can see Austin's increasing, Dallas. It doesn't even have the Florida numbers yet, but it's going really, really slow. Wall Street does not like that, but you can see they're producing these cars. They're making 1,000 a month. So it's starting to get there. There's more registered. But this is the type of thing that's just going to explode one day. It's
Yeah,
not
so
going to go.
this page is going to be very important for Tesla. I'm going to just favorite this page. It's going to be very
Yeah,
important. It should be looked at, I would say, on a regular basis.
I would agree with you. But what they're just to reiterate, guys, do you guys see why they're going slow? If they screw this up, it's going to cause them all kinds of issues, and the media is going to be down their throats. Tesla Robotaxi ran over somebody. Tesla
Yeah.
Robotaxi went through a red light.
Omar, you're cutting out.
Although humans feel very cool. Okay, the idea is to go super slow,
Yeah.
gain that level of comfort, and then scale this thing very, very rapidly. And then once it scales, then hey guys, there's no looking back at that point in time. That's the opportunity. That's where the opportunity is. So right now, Wall Street seeing this, hey, you got how many cars on the road? 39 unsupervised. Although it's more than that because I don't know for whatever reason this is not including Florida. Magdine, the one you saw in Florida, did it have a person in it or not? I'm not talking about a passenger, but did it have a supervised? Was it a supervised ride? If you could let us know.
There's a question, are government regulations a concern for Robotaxi? By Dave.
Yeah, Dave, absolutely they are. They are, but they've already got permission to operate in 7 different cities. As they can prove that it's safe, it's reliable, and it's cheap, the cheap part's not important. If they can prove that it's safe and reliable, then more and more jurisdictions will open up. That's as simple as that. It'll be a lot faster in the United States. So Maggie says no one was driving. Okay, so if no one was driving, or there was a safety supervised driver, because the supervised driver doesn't sit in the driver's seat. It sits in the passenger seat. With the Cybercat, there's no steering wheel anyways. So it's not like you can take control and like pull off to the side. There's no steering wheel. So going back to your question, Dave, and thank you, Magdalene, for that. Regulation. No one is riding shotgun. Okay, if no one's riding shotgun, that means it's unsupervised. That unsupervised fleet is only at 39 so far. It is not. So it's certainly this is not counting Florida. So maybe Florida hasn't provided their data yet. But Dave, more and more, like if you see a city and they've got thousands of these things and they're operating without incident, how long will it be before other cities pass legislation to say, "Hey, yeah, we're good to go with this"? Even Canada will get around to it eventually after with all of our red tape. We'll get around to it eventually as well. So will other countries. And then it becomes a global phenomena. Think of how many people there are in this world. 8 billion. plus people. This is what I'm saying. This is a game changer technology. We are in the testing phase, the very early. We're at the top of the first inning here in terms of implementation. But once this is on the road, it's rolling, it's scaling. This company is going to make insane amounts of money. Now they're going to be able to pour that money back into Terrafab, into Optimus, all these other things that are down the road. How the stock price reacts in the midterm, we don't know because we don't know the capex spend. We don't know how fast it's going to scale. We don't know these things yet. But the question you have to ask yourself is, do you believe in this technology? Do you believe in the leadership team? Wall Street's just saying, hey, you got 39 cars on the road. Wow, big deal. Waymo's got, I don't know how many Waymo has, a few thousand. You're nobody compared to Waymo right now, but that's not the case, really, if you look into the details. It's a whole different technology. Okay. Thanks, Daniel. Let's save this page for future use and keep an
Yeah,
eye on
I
it.
have. I have.
Okay, I'll go back to sharing my screen. Okay, and let's just kind of wrap this up. We don't keep you guys too long. Uh okay, so Q2 deliveries were supported by record deliveries in several markets: South Korea, Australia, Colombia, Japan, Taiwan. Japan's a big one. Thailand, Portugal, Philippines, etc., etc. Chile, Slovenia, Lithuania. We launched the Model YL in the US. That's a nice one. I think it's the longer range Model Y. Model Y being the number one selling vehicle in the world. So having a slightly bigger version of it is a going to be that is a much better use of money than that Cybertruck was. Okay. Energy storage. We achieved record energy deployments in emerging markets. Okay, EMEA. Okay. Supported by record deployments from Megafactory Shanghai, which continues to ramp production. So Shanghai is not quite there yet. As you can see, Shanghai is only at 20 gigawatt hours. California, Fremont, is at 40 gigawatt hours. So that's continued. So we expect this number to ramp up in the future. We also on track to begin production of Megapack 3 and Mega Block this year out of Megafactory, Texas. Okay, that's also a very good sign. Powerwall is now available in Germany. It's designed to meet the power needs of homes in three-phase single unit. Again, not a huge needle mover, but it's nice to have. They're making making progress. This is a big one. We have decommissioned the manufacturing lines for Model S and X at our Fremont factory and are installing the first generation line for Optimus. Now, think of Optimus kind of being like iPhone 1. It's going to be very expensive, or not even, I don't know if iPhone 1. I remember we got our first VCR back in the
It,
early 80s. It was actually early 80s. And that damn VCR was 1,200 bucks back then. Not my family because we couldn't afford it, but there was another family who got it. It was 1,200 bucks. That must be like thousands of dollars now, and it sucked. It's just a VCR, but that concept of being able to do that it was incredible. You can watch movies when you want. The first generation Optimus, for anyone who's as old as me, is gonna be like that first iPhone, that first VCR. It's going to be really cool, but it's going to progress rapidly in terms of what its capacity, capability, and pricing is. Pricing will come down rapidly as more and more are made, and its capabilities will go up rapidly. Okay? We went from the VCR to DVD players to streaming. It's a progression. iPhone 1, if you look at iPhone 1 now compared to iPhone 17, it's completely different. Not even close. So they expect to start production soon. Okay. Now, whatever soon means, who knows? With Elon, that could be, I think it's intended by the end of the year. So construction right now, we're under construction. Now, this is a wild card. We're just looking right now, we're looking at Robotaxi and Cybercab. That's the big one for us. Yeah, great. They sell more cars, they have more energy. That's great. This one would dwarf all those opportunities by an order of magnitude, which would be 10x, many orders of magnitude, in fact. But we're further away from this than we are Robotaxi. Robotaxi Cybercab is really close. Now, if they can get this thing done, say sometime in 27, start production later on this year, start maybe selling some units in 27. There's already Optimus robots working in the Tesla factory now. How quick it goes, what the capabilities are, we don't know yet. But that changes everything. Okay. Let me know if anyone has any insight into Optimus at all. But what do you guys think of the Optimus opportunity? You understand how this changes the world? If you have an artificial intelligence brain, which is Grok, okay, and you have a robot that can do and talk to you, and like like we talk to ChatGPT, hey ChatGPT, do this for me. Hey robot, hey Optimus, and you can probably call it whatever you want. Go make me some eggs. And after that, can you clean the garage out? After you've done that, can you go mow the lawn? That's going to be Optimus. That changes the world, but it's not there yet. It's coming, but it's not there yet. Okay?
There's a comment.
That's, pardon me, Daniel?
There's a comment. Magdalene says, I think Optimus will be everywhere. I see it as the Alexa of the future.
Yeah, yeah. It could very well be the Alexa of the future. It will be everywhere, and it's going to be a really weird future, right? And you're going to go to walk into a restaurant. You're going to go to a store. There will be robots there, a lot of them, and it'll be weird, and people won't like it at first. It's going to cause job displacements. It's going to cause a lot of problems at first, but we will adjust as a species, as humanity. We will adjust. Now we're right at the beginning. We're not even probably in the top of the first inning here with this. We're like, like national anthems haven't even played yet. That's where we are with this. But look at the opportunity again. The opportunity is massive. That's where we are. Okay. Now let's shift here to AI training and compute. We have more than doubled our on-site compute in Texas in terms of megawatts of compute during the first half of 2026. Cortex 2 supports the development of both vehicle and humanoid robot autonomy software and will ramp up over the rest of the year to ensure we have sufficient compute resources. So both Optimus and Robotaxi slash Cybercab will require a lot of compute power. There is your capex. Now you have to ask yourself, are they spending this money wisely? Do I believe in these two products? If you do, hell of a future. If you don't, this stock will not do well. That's really what it boils down to. So battery production, that's the limiting factor right now on making more vehicles. We continue to work on initiatives to increase battery pack capacity, remaining its limiting factor in ramping vehicles production globally. That's the problem. Okay, so our teams made further progress on the ramp of new battery material factories, including vehicle pack capacity in Berlin, cathode material production, lithium refining in Texas, and LFP batteries in Nevada for energy storage products. We are also increasing production of 4680 cells to support production ramps of both Cybercab and Tesla Semi and increased production of Model Y. Semi, don't even worry about that for now. When that comes, it comes. It'll be bonus. Okay. But you can see here they are getting more Tesla AI training capacity ramp, megawatts of compute. This is what they need. Future plan capacity. This is where a lot of your capex is going. Okay. Supercharger network, we already grown to that. That's growing pretty nicely. AI software, AI inference compute, automotive, and others. AI software, as you can see here, we began delivering full self-driving version 14 Lite to customers in the US and South Korea with AI 3 hardware. Okay. Anyways, the point is, as you can see here, the miles on FSD 12 and beyond are increasing rapidly. This is the data that is used to train the car how to drive. It's just that simple. Okay, so very good sign here. The more data they have, the more compute they have, the quicker they can solve this problem. The more and more data, more and more compute, you got the problem solved. Full self-driving becomes real. How much longer it takes, don't know yet. Regulations, all that stuff still has to be done, but we're getting there. We're getting there. AI inference compute. We continue to make progress on construction and equipment and procurement of our semiconductor fab in Austin. While still in the early stages, this project is critical to building our own chip making capabilities to ensure reliable, long term supply of essential logic and memory chips for our products. Huh, interesting. So, what they're saying is look, we need a lot of chips and a lot of memory to do what we want to do. We can't rely upon the Microns and the TSMs of the world. We're going to make our own. Now they become more vertically integrated, but again, this is going to be CapEx, capital expenditure. It also bodes really well for Micron and for TSM, AMD, etc., SanDisk, etc. Why? Because it tells you that, hey, look, their demand is probably going to be so high that they won't be able to meet, they might not be able to meet them. And Tesla's not taking the chance. Like, we're not taking a chance. We're going to do this on our own. So we're completely vertically integrated. Also, it gives them more margin as well if they're vertically integrated. But it's going to cost money to do it, and it's going to take some time. Let's take a look at this. Custom review of full self-drive supervised usage stats. Okay. Longest hands-free drive, self-driving, total miles. It's all headed in the right direction. Okay. Automotive and other software. In July, we begin rolling out our summer release with additional functionality aimed at enhancing customer experience and further promoting our autonomous capabilities. Customers can now view their self-driving stats on the right, making full self-drive supervised more social and interactive. Okay, the summer release also includes Grok functionality such as making phone calls, searching and playing music, and adjusting control volumes, climate controls. So you say, hey, Grok, do this. Hey, Grok, do that. That'll be kind of cool. Automotive navigation expands beyond home and work to support destination-based personal habits and schedule, including school drop-offs on the way to work. Very cool where all this is kind of going. Okay, very cool in my opinion. Okay. Robotaxi, this is the big one I want to take a look at. We started production of Cybercab, our purpose-built autonomous EV designed to be the workhorse of our Robotaxi fleet. Now, Cybercab is that two-seater with nobody in it, no steering wheel. Robotaxi is any car that Tesla currently has that has the software. Okay, so they're two different things, but they have the same objective. Engineering test drives of production cybercabs on public roads also began during the quarter. We began offering employee rides in cybercabs in our Gigafactory Texas campus in July, both important precursors to cybercab deployment in our robotaxi fleets. Okay. Cumulative robotaxi miles. As you can see here, it's ramping up, but it kind of slowed down here for this last quarter. Like the ramp slowed down. It should have gone more this way, but it went this way. That's interesting. Okay. Why'd that happen? Well, again, they're being very cautious. We expanded the unsupervised operation area in Austin and launched unsupervised rides in Miami, Orlando, Tampa in July. Preparation for expansion of robotaxi service to additional U.S. metros continued, including testing, permitting, and first responder training. Okay, so they're getting there. Okay, now here are the cities. Okay, San Francisco. Right now, we still have a safety driver. Austin, ramping unsupervised. Dallas, ramping unsupervised. Houston, Miami. Phoenix is underway, excuse me. Miami, Orlando, Tampa, Las Vegas. Once, I'm telling you guys, once they get comfort, once they know this thing works and they're comfortable, then the boom happens. Boom. City after city after city after city. And the existing cities they're in, there would be far, far more vehicles. Okay. Uh, Let me see if there's any last questions. Otherwise, we don't want to keep you much longer. Thank you so much for joining us. Celeste says here, China self-driving trucks, which Tesla has with EV trucks. Good call. I believe guys from the call, no problem. All right, just a couple comments here. Okay, guys, look, the future here is really, really bright, or potentially maybe very bright. But take that with a grain of salt. There will be bumps along the way. There could be too much capex, negative cash flow. All these things could happen. But the question essentially you have to ask yourself is, do I believe in the story? If you believe in the story, you believe the company will be far more profitable very soon. And if you believe in that, well, then there could be a lot of upside potential from here. But that's a question we have to make. For us, we know what we think, and we hope we've shed some light on this. Thank you guys for joining us. And for those of you joining us tomorrow, we will go over Google and why is it getting killed as well. All right, Google earnings and exactly what happened. Thank you guys. Have a great.
Thank you.
See ya.
Bye.